Hi, good afternoon. Today we're going to talk about overlays and underwriting conditions. So we discussed in the previous PSA about the difference between pre-qualification and pre-approval. So pre-qualification, you're calling in, you're giving your loan officer the information. There's really no documentation or any source data to back that up. When you apply for a pre-approval, before you have a property, then you're providing your W-2s, your pay stubs to back up or to document all the information that you gave us verbally. Well, and some of you ask, well, how do you even know what documentation you need? How do you know what to ask us for? So there are a lot of different types of loans, but really just a few fundamental basic ones. Some lenders or banks or loan officers will try to come up with some kind of catchy name or something to get you in the door. But a lot of times when you really get down to the nitty-gritty, they're all the same programs. They're just trying to get you in the door to maybe flip you over into one of those other types of loans. So you have FHA, of course, Federal Housing Administration, VA, Veterans Administration, Rural Development, which is actually under the U.S. Department of Agriculture, but those are for properties that are outside the city limits. There are income caps associated with them. But then you have conventional. So conventional are, the minimum down is 3%. If you've owned a home in the last 3 years, you have to put 5% down. But not to get into too many of the weeds of that, but each loan type have different product requirements or different documentation requirements. So those are what you call agency requirements. So for example, I receive a lot of calls every year from realtors or from friends of previous customers who have been told by another lender or loan officer or brokerage office, a mortgage brokerage office, that their particular loan doesn't meet VA guidelines because there's this crazy VA guideline of such and such. 9 times out of 10, that is not actually a VA or an agency guideline. It's actually a lender overlay. And that's where a lot of people are not aware of that. And it took me actually quite a bit of time. I've been doing this almost 33 years. But in the very beginning of my career, when you would have lenders or investors that would give you requirements or give you conditions, well, that's a VA requirement. I learned very, very quickly that I needed to question exactly what that was about. So, for example, they may have a VA overlay requirement. Gosh, let me think of something strange. Well, it doesn't really matter, but whatever the condition is. Sometimes it's dealing with spouses or debts or income requirements. There's all kinds of very unique things that particular investor has thought that they need to add an overlay. They need to make the underwriting a little more stringent. So we can add conditions to agency guidelines, but we cannot take any of them away. So that's another reason why it is so critical as loan officers, builders, and even as clients, when you get sometimes, it's kind of like getting a second opinion on some type of, on a medical condition. Sometimes it's not a bad idea whenever you have, or your loan's been rejected or your loan's been denied, to ask those questions of exactly what is going on, why is it being rejected, ask them the specifics of it. So then that way, when you call another lender, you can actually ask that question. So the takeaway from this is that there are agency guidelines, and then lenders can actually layer overlays on top of those guidelines to make underwriting more stringent. So learn to question those guidelines. Loan officers, processors, they're supposed to be reviewing all of those items as you're submitting them in to your lender for their review. It's not the underwriter's job to process the file once they get it at the very end. A lot of times there are a lot of delays at the very end. And the majority of time it's because the loan officer or the processor missed, or number one, they probably didn't even review the items. They just, yep, let's check a box off that I have W-2s and pay stubs, but they didn't actually look at the documentation to see if underwriting was going to have any questions. They just gather it, send it into the underwriter, just kind of whatever they come up with, and then they come back with, a whole slew of conditions, and then that's what you're scrambling sometimes to gather together. Now, sometimes you just have a quirky underwriter that just sometimes comes up with conditions. They're human too. Sometimes they make mistakes or they require something maybe that's not needed. But the majority of time, a lot of horror stories that I hear is mainly because nobody ever bothered to look at the documents before they were actually submitted into underwriting, and they're waiting for that underwriter to actually be the processor. And all of that should have already been done. The underwriter should just be checking off boxes, making sure that all of the items are checked off, that all of the conditions are satisfied before they issue that approval. So if you have any questions, don't hesitate to reach out, and always question your loan officer, always question your lender if they come back with any type of strange conditions. A lot of the online companies, they will run clients to death on having them get all kinds of conditions that are not typically required by most lenders. So just don't hesitate to question things. So have a great day.